Hi. Today I'm going to share with you on what to look for when financing your next fix and flip investment property. Before I get into those tips, let me tell you how I got to where I'm at now. I was working for a big corporation full-time and was flipping houses on the side. After about 5 or 6 flips, I decided to take it full-time. Now, 5 years later and many investment properties under my belt, I'm going to share with you things to look for specifically when it comes to funding your next investment property. First, when you find the property that you want to invest in, you want to make sure that the numbers make sense and that it will be a good deal for you. This may sound obvious, but you really want to make sure that the numbers work out to where you will be making a good profit at the end. You want to determine the repair costs and ARV on the property you are planning on flipping. You also want to plan to act on it as quickly as possible. Once you have this laid out, it will also help you get the funding you need. Showing lenders that you've worked out the numbers and have done your due diligence goes a long way. Now, how to get the funds for your property. I've borrowed money in several different ways to purchase different properties, and here are my takeaways. Traditional bank loans. Although interest rates can be reasonably low, it can take up to 45 days to get funding from a big bank. And that's because they require multiple credit checks, your tax returns, your pay stubs, and much more paperwork. In most cases, you don't have that kind of time to close on the property because a good deal doesn't hang around that long. Private lenders. Where traditional banks fail is where private lenders shine. This is a great way to get funding for your investment property. Private lenders primarily base their decision on the value of the deal and how high you will leverage with them. This can be done quickly and with very little paperwork. I've worked with several different private lenders, and I found that they are not created equal. You want to make sure that the private lender you plan to work with meets certain criteria. First, you want to make sure that everything is transparent. What this means is that all terms and fees should be disclosed to you up front. You don't want to be surprised by hidden fees thrown at you at the 11th hour. And don't get shocked by lenders who tell you they can't fund at the last minute, leaving you in a really bad spot. For instance, a lender might take too long in the underwriting process, thereby causing you to not be able to fulfill your end of the contract. Obviously, this is something you want to avoid. Secondly, you want to find a lender who can work with you on a long-term basis, from little deals to big deals. You want them to be quick, easy, and reliable, and be able to fund not only your current investment, but future investments as well. So what do I mean by easy? I'm a busy person, so I need a loan process that I can access when I'm on the road. I want to be able to get my terms, upload all my documents, and track the status of my application, all from my phone. Private lenders also do not ask for pay stubs, asset lists, or tax returns. This is another plus for making the process easy. Third, you want a lender who's experienced and has been in the business for a long time. If the lender has underwritten over $100 million in deals and can fund deals in tight turnaround times, it tells you that they're very reliable. You also want to build a strong relationship with a solid private lender. This will allow you to avoid a lot of headaches later. By paying off a few deals and making several on-time payments, you will have established yourself as a great partner, which then provides you with opportunities for better rates on future investment properties. Fortunately for me, I was referred to Arch Loans by another real estate investor, and she suggested that I apply online for a quote. In less than 60 seconds, I was able to get specific loan terms for my deal. I love this because I was able to do this while traveling directly from my phone. It was quick and easy. I got a call from Mike at Arch Loans soon after. What a great guy. We went over the details of the deal. The property I was looking into flipping was $250,000. It needed about $30,000 in repairs. That would take about 3 months to complete, and the ARV was $360,000. This property was a single-family home located in Bakersfield, California. Mike ran the numbers and said it was a great deal and was able to move forward with the underwriting. He was very transparent with all the terms and fees and walked me through each step. But the very next day, the deal was approved. I got the funds and was able to close on the property within 5 days. Mike from Arch Loans saved me a lot of time and hassle when it came to funding for my deal. I avoided long underwriting wait times, hidden fees that could have popped up at the last minute, and the uncertainty of if the money will even show up when I needed it. Once my deal was done, my focus quickly went to finding another great deal. Here are my take-home points for getting the financing for your investment property. Find great deals and plan to act on them fast. Figure out the repairs that are needed and determine the ARV. And finally, use a reliable private lender like Arch Loans to make your deals happen quickly and seamlessly. It makes a huge difference. Arch Loans. Quick, easy, reliable.